Strategy is 17,000 BTC from Overtaking BlackRock, and the Copycats are drowning. Michael Saylor's strategy holds 766,970 Bitcoin as of April 6, 2026. BlackRock's iShares Bitcoin Trust (IBT) holds approximately 784,620 BTC as of April 8. The gap between the world's two largest Bitcoin holders has shrunk to roughly 17,050 coins, worth about $1.3 billion at current prices. At current accumulation rates, Strategy will overtake BlackRock within weeks. The question is no longer whether it happens, but what it means for the 220-plus companies that tried to copy the model and failed. The pace mismatch strategy has added 89,599 BTC in 2026. BlackRock's IBIT has grown by approximately 8,484 BTC over the same period through net ETF inflows. That is a 10-to-1 buying ratio. The most recent purchase, 4,071 BTC for $329.9 million between April 1 and April 5, funded through at-the-market equity sales, disclosed in an SEC Form 8K filing. Strategy's average cost basis across its entire stack sits at $66,385 per coin, with total acquisition costs of $50.9 billion. With Bitcoin trading at $72,072 as of April 10th, the position is in profit on an aggregate basis, though the company reported a $14.46 billion unrealized loss for Q1 2026 alone, reflecting the drawdown from Bitcoin's slide below $70,000 earlier in the quarter. BlackRock's IBIT, by contrast, does not buy Bitcoin on its own initiative. It holds Bitcoin on behalf of shareholders. When investors buy IBIT shares, authorized participants purchase Bitcoin and deliver it to the fund. When investors sell, the reverse happens. IBIT's growth depends entirely on net inflows, which have slowed in 2026 compared to the fund's explosive first year. STRC, the instrument that changed the math. The acceleration owes much to STRC, a preferred equity instrument strategy began issuing in 2026. STRC pays a variable dividend, currently 11.5%, ranks above common stock in a liquidation, and carries no maturity date. For investors, it offers Bitcoin exposure with dividend income and bankruptcy seniority. For Strategy, it provides a capital pipeline that does not dilute common shareholders as aggressively as direct ATM stock sales. The numbers are striking. Last week, STRC funded 75% of a $1.5 billion Bitcoin purchase. The week before, it raised $283 million for a 4,000 BTC buy. Strategy has spent over $7 billion on Bitcoin in the first 2.5 months of 2026 alone, with STRC becoming the primary funding mechanism. Andre Dragos of Bitwise Europe expects Strategy to acquire more Bitcoin than IBIT as long as the macro environment stays volatile, noting that volatility drives demand for STRC's yield premium while simultaneously slowing ETF inflows. The copycat collapse. When Strategy's stock traded at a persistent premium to its Bitcoin net asset value, NAV, in 2024 and 2025, the playbook looked replicable. Buy Bitcoin with corporate treasury funds. Watch the stock re-rate. Use the inflated stock to raise more capital. Buy more Bitcoin. Over 220 companies adopted some version of this strategy. GameStop bought $500 million worth. Trump Media and Technology Group announced plans to raise $2.5 billion. Strive Asset Management, founded by Vivek Ramaswamy, raised $750 million with another $750 million in the pipeline. The problem, the premium evaporated. Bitcoin fell from above $110,000 in mid-2025 to under $70,000, and the copycats lost their financial engine. CryptoQuant data cited by CoinDesk shows that other treasury firms' share of corporate Bitcoin purchases collapsed from 95% at the peak of the trend to approximately 2% today. Strategy now controls 76% of all Bitcoin held by treasury companies. Two firms are especially underwater. Metaplanet and Nakamoto Holdings both carried average acquisition costs above $107,000 per Bitcoin as of December 2025. With Bitcoin at $72,872 as of April 10th, Both positions show losses exceeding 30%. Strategy survived because it started buying at $11,653 in August 2020. Its blended cost basis of $66,385 still shows a profit at current prices. The copycats who entered at $90,000 or $100,000 do not have that cushion. The structural difference. It is worth separating what Strategy and BlackRock actually represent. Strategy is a single corporate entity making a leveraged directional bet with its balance sheet. If Bitcoin drops 50%, Strategy's equity gets destroyed. The company has established a $144 billion cash reserve to cover 24 months of dividend and interest obligations, but that buffer has limits. BlackRock's IBIT is a pass-through vehicle. BlackRock itself bears no Bitcoin price risk. Shareholders do. IBIT's holdings could shrink to zero if every shareholder redeems, or grow to 1 million BTC if inflows accelerate. The fund is a mirror of collective demand, not a corporate bet. That distinction matters. Strategy overtaking IBIT in raw Bitcoin held would be a milestone, but it would mean a single company's balance sheet holds more Bitcoin than the aggregate demand of every investor in the world's largest spot Bitcoin ETF. That concentration has no historical precedent in any commodity market.